Okay, well, Bankole, looking at the results from this bi-monthly auction, we saw higher yields, we saw subscriptions down. Definitely, we're seeing waning interest when it comes to our foreign investors. So what is your take on the opinion that foreign investors are actually returning to our debt markets, and we will see them returning to our debt markets in the weeks ahead as yields on shorter dated paper are becoming more attractive?
Yes, what has happened actually is that we had T-bills and bond maturities of huge volumes or amounts. We expected that a huge proportion of this monies or amounts will be invested or plowed back. But what we've seen is that people are holding back on their investments, of course, because of what is also happening with the Naira in the foreign exchange market. And then the larger picture, that's the global slowdown in all economies. So usually investors and foreign our counterparts are taking out some of their positions in the more riskier frontiers, that is Africa and then some parts of Southeast Asia, before things get bad. And just like we've seen that in Spain too, there was a further downgrade by Fitch. And one other issue over here too is that interest rates are going up because of illiquidity in the money market. This has also affected the appetite for investors, even locally. We're seeing people do more of short-term 7-day placements to earn just as high as 182 days T-bills, what they will yield, basically. So that's what's happening. That's what's causing the.
Well, Bankole, talk to me about the outlook for our fixed income markets. I mean, if foreign investors don't regain interest, and certainly we're seeing the global picture isn't getting any better. Of course, we're hearing in the U.S. Bernanke is hinting at further quantitative easing. The euro debt crisis doesn't seem to be getting any better, as Greece seems to be about to exit the eurozone. Of course, China, we're also seeing them cutting interest rates as growth slows. So obviously, the picture globally isn't getting any better. So what's the outlook for a fixed income market with this dim picture globally?
Okay, there will be demand for fixed income securities in Nigeria because as at last quarter of 2011, we saw demand, even locally, after the elections, and then we saw a lot of money going to fixed income just as the index and the equities markets continued to drop. We thought that it was a switch from very risky securities to the fixed income security that was fairly or more stable. But what we'll see is that there will be a slowdown compared to what has happened in the last 6 to 8 weeks. We may not see those huge funds coming in, but locally there will be demand, especially on the short end of the fixed income market, that's T-bills. We're going to see yields stay at 15 levels. I don't see them getting to 16.5 levels. Just as when federal government allocates money, we'll see that people will go in on the short-term secondary market, going to take out all the 30 days treasury bills just to hold some funds, some liquid security. And then for bonds, we've seen a slowdown generally. It's been a general slowdown on bonds because what we're seeing now is that T-bills yields are becoming so attractive. They are getting very close to the FGN bonds. And there's no wide gap on the yields of FGN bonds from, 2 years to 20 years. It's an inverse yield curve as it is. So basically, we're seeing a major slowdown, except for companies or investors who are regulated or mandated by regulations to buy. We're seeing more people playing around the T-bills as it matures, some plowing the takings or the returns of these investments, basically. But we'll see demand for T-bills in Nigeria. It may not be what we've seen in the last 8 weeks, but definitely there will be some level of more activity.
Well, thank you, Bankole. I actually want to shift our attention now to the Naira. We do know that the currency is continuing to lose value. We saw it close at 162.60. Of course, as oil companies holding back on their normal sales. Now, we expect federal allocations to come in next week. Do you see that improving the value of the Naira? Because the Naira is becoming a worry, actually.
Well, because we are an import-dependent country, when money comes in, actually, we spend more. And when we spend more, it means we're having more Naira chase the dollars. So this may not necessarily help. In fact, holding back on allocations may just further tighten the money market and help the naira in actual fact. But when federal allocation comes in, what we'll see is that we'll see drop in money market interest rates, that's interbank, and people will do, just like I said earlier, have securities of 30 to 91 days. So you see yields on T-bills also coming down. But for the FX, Nigerian naira against the US dollars, you'll see stability. Really, I won't see a revaluation yet because the demand is real, and oil companies are holding back, trying to get the best they can. We're seeing them sell every other week, as against what we had like 8 weeks ago, where people would sell every week. We're seeing them sell just on need to sell basis, just to clear out immediate obligations. But going into the next 2-3 weeks, we'll see CBN also intervene, because just like they said, they would defend the naira to be stable at below 160 levels.
Well, Bankole, is it sensible to assume that the situation we're sort of seeing in our fixed income markets and with the naira, and of course with foreign investors sort of exiting, is it because of the fundamentals, or is it because of sentiment? And when I say fundamentals, of course I mean our high inflation, of course, and our macroeconomic situation, or is it because of the weakening naira? I mean, it's sort of sentiment versus fundamentals. What do you think is really the reason for what we're seeing in our markets right now?
The weakening naira is the major concern, but that's not just the issue. On the global stage, like we said, there's a general slowdown worldwide, and foreign investors will usually take out all their funds that are at the risky frontier, like I said. I mean, consolidating all they have in their accounts and all that. So basically, it's not just about the weakening naira. If you look at the trend year on year, see that at this point, I mean, at this period of the year during the summer, all through to September, when all sorts of fees will be paid abroad and repatriations will also be done, we'll see that the naira usually inches up in value. Sorry, it devalues against the US dollar. So it's not just about the value of the naira, which is, I mean, to an extent priced in. It's about what's happening on the global stage. People are taking off some of their investment. They've earned this high interest, I mean, coming from economies where their interest rates or cost of borrowing are very low. You've earned 15% on a one-year instrument. Some of them do not want to reinvest or plow back these monies into the securities, even though they are being reissued at higher levels. So basically, it's fine, the currency devaluation and what's happening on the global picture, a slowdown generally.